What's up, traders, and welcome back to the channel where, of course, we turn complicated trading concepts into things that you can explain to your mum, your dog, even your Uber driver, and you might even be able to impress them a little bit in the process as well. Now, today we're tackling one of the most fundamental, misunderstood, and let's be honest, often ignored parts of trading, and that is the trading plan. Now, before you yawn and click away thinking you don't need a trading plan, you don't need a checklist, you're a vibe-based trader, I get it. Please just stick around anyway, because without a doubt, you're going to need a trading plan. Without a trading plan, you're not really a trader. You're actually just a chart gambler. And realistically, the only consistent result for a chart gambler in that game is losing money. So in this episode, I'm going to break down how to build your daily trading plan from complete scratch, whether you're brand new, whether you've been in the game for a while, but you feel a little bit stuck. Don't worry, sit tight. I've got you covered. Now we're going to go deep, but also I'm going to try and keep this fun and understandable for beginners, because let's face it, trading is stressful enough. So without me boring you into a coma, let's get right into it. So let's start with that $1 million question. Do you really need a trading plan? Well, the short answer is yes. And the long answer is yes, you absolutely do. Let me break down why. So what is a trading plan? Basically, it's a blueprint that keeps you focused, disciplined, and accountable so that you don't just go full tilt at 2 p.m. chasing trades because you missed the morning move and now your ego is writing checks that your account can't cash. So why do beginners especially need one? Well, when you're new, every single candle is confusing. Every move feels very personal. One minute you can be very calm, the next you're placing like 3 trades in 5 minutes because your favorite YouTuber said just buy the dip now. Remember, without a plan, every trade just becomes a reaction. And reactive traders are always one step behind. I want you to imagine this. You're driving across the country, no map, no GPS, and no idea how much fuel you need. That's what most new traders do, and they wonder why they end up stuck in the middle of nowhere. So here's the real purpose of a plan. Here's what a good plan helps you do. Trade less, but trade better. Avoid emotional trades. It's going to help you measure your performance based on process, not outcome. It's going to help you stay focused and clear-headed during the chaos, and it's going to help you build consistency and trust in your system. Think of it this way. A trading plan is your parachute. You might not need it every second, but the second you do need it, you're going to be very glad that you had it. Next, I'm going to break down the 7 essential parts of your daily plan, and we're going to go deep into each one so that even if you've never placed a trade before, you're going to walk away from this video knowing pretty much exactly what to do. All right, now that we know why a daily trading plan is essential, let's look at what actually goes into it. Think of your trading plan like a pizza. If you forget the dough, you've just got a salad. If you forget the cheese, you've got just a plate of sadness. And if you skip the sauce, you're just lost entirely. Each of these 7 components is an essential layer of that pizza. Together, they create the recipe for consistency. And here they are. Number 1, pre-market routine. Get your brain, body, and focus ready for action. Number 2, news and fundamentals. Know what news events might blow up your trade throughout the day. Number 3, market bias. Decide whether you're looking to buy, sell, or just stay neutral on your trades today. Number 4, key levels. Mark up the zones where price is most likely to react. Number 5, trade setups and entry criteria. Define what qualifies as a trade and what doesn't. Number 6, risk management. Protect your capital like it is your baby's college fund. And it might be. And number 7, daily review and journaling. This is where you reflect, learn, and improve, and rinse and repeat. And here's the best part, guys. Once you understand these 7 steps, you can do all of these in under 30 minutes every day. But you'll trade 10 times smarter because of it. So let's break them down one by one. Firstly is market routine. Yes, the pre-market routine. This is like a warm-up before a workout. Would you deadlift 200 kilos without stretching first? Maybe you would, but then you'd probably end up on a mobility scooter, or in this case, trading rehab. Your pre-market routine is the mental, emotional, and technical warm-up that sets the tone for you for your entire day. So what actually is it? Well, your pre-market routine is a set of repeatable actions that you take before you enter the market. It's the time you take to prepare your mindset, charts, focus, and this is why it matters. Because when you treat trading like a job, not a hobby, you show up professionally. Your routine tells your brain, we're not just scrolling on TikTok right now, we're actually running a business. So here's how to build one for yourself. Firstly, wake up at the same time every day. Routine equals rhythm, rhythm equals mental sharpness. Do not wake up at 6 a.m. one day and 9:30 a.m. the next. Be consistent with your time. Number 2 is a quick mindset check. Ask yourself, did I sleep enough? Am I feeling emotional today? Can I actually focus? If the answer is no to all 3, maybe just don't trade today. Your capital will end up thanking you later, trust me. Number 3, move your body, guys. You don't need a CrossFit session, but do some light stretching, go for a walk, or even do some jumping jacks to wake up your nervous system. Number 4, hydrate and fuel up. A cup of coffee and a gallon of water. Just do not trade while you're hungry. Trust me, it's a recipe for disaster. Number 5, review yesterday's trades. What went well? What didn't go well? Did I follow my plan? Look for these patterns. If you make the same mistakes 3 days in a row, congratulations, it's not a mistake, it's then a habit. Number 6, open your chart and observe. No trading yet. Look at what did the markets do overnight, like on the Asian session. Where is price now relative to yesterday? Is it ranging, trending, or is it just being fucking weird in general? The goal here isn't to jump in, it's to get a read on the market's mood. Just like you don't walk into a party yelling before you know who's actually in there, don't walk into the market clicking buttons without some context behind it. Here's an example of a pre-market routine. 6:30 a.m, wake up, stretch, water, coffee, whatever. 6:45, time task, quick mindset check-in. 6:50, review your journal from yesterday. 7 o'clock, open charts, scan the market action. 7:15, note bias and key zones for the day. You don't need to spend hours on this, just be very intentional with what you're doing. Because if the first trade of the day is placed in a fog of morning grogginess, it's probably going to end up in regret. Number 2, news and fundamentals. So what is this? It's a quick scan of scheduled economic news events that could impact the markets and obviously your trades as well. Here's why it matters. Even if you're a purely technical trader, ignoring news is like walking into a thunderstorm because you didn't check the weather beforehand. So here's what you should be checking. Look at different websites like Forex Factory, MyFXBook, or the Daily FX Economic Calendar. Check for very high impact news, the news that is really going to affect your chart for the day. Things like interest rate decisions, NFP, CPI, GDP, all that kind of stuff. Next, know what currencies are going to be affected by that news and when it's going to happen. Here's what it's going to do for your plan. It's going to help you avoid entering right before a big market shaking release. It's going to help you anticipate potential volatility and the direction. It's going to allow you to pause or even adjust risk accordingly. And a pro tip here, unless you're experienced, please avoid trading 15 to 30 minutes before or after any red folder big news event. Number 3 is market bias. Now, what is this? This is your directional outlook on the market for the day. Are you leaning bullish, buying, bearish, selling, or neutral, just chilling in the middle? Here's why it matters. Having a bias narrows your focus. Instead of reacting to every little move, you're going to actually look for setups aligned with your broader view. Here's how you can build one out. Analyze the 1 hour and the 4 hour timeframes. Identify if the market is trending, like higher highs, higher lows, lower highs, lower lows, that kind of thing. Look at the structure. Are we near a major support or resistance zone? Combine it with some of the fundamentals, news trades. Is today's news USD positive or negative? For example, if euro dollar is trending up and there's no negative euro news coming, your bias might be bullish, so you'll look for buying opportunities, not shorts. Another tip on this, your bias isn't a prophecy, it's a guide. Be flexible, not stubborn with this. Number 4, your key levels. So this is a specific price zones where you expect price to react. Things like support, resistance, liquidity levels, and supply and demand zones. Here's why it matters. Price doesn't just move randomly despite what you might think. It often reacts at very important levels. These are your trade location zones. The different type of key levels that you can see are like previous day's high and low. Price often respects and raids these levels a lot. Asian session high-low, often manipulated during London Open. Support and resistance zones, which I know you all know, these are drawn from past price reactions. And supply and demand zones. These are areas where price made large moves showing institutional orders. And finally, round numbers. Psychological levels like 1.1 thousand, 1.3 thousand. They often act like magnets. So here's what it's going to do for your plan. It's going to help you plan where trades might occur. It's going to prevent you from entering in the middle of nowhere on your chart. It's going to improve your risk to reward by waiting for setups near strong zones. Another tip here, mark them on your chart before the session starts. That way you're not scrambling to draw boxes mid-candle like a panicked artist. If you're interested in finding out where your support and resistance zones are without having to fumble around, I've got a completely free indicator which does it for you. With a click of a button, all you got to do is check the link in the description below. Number 5, trade setups and entry criteria. This is your list of valid trade setups, the patterns and conditions that must exist before you enter that trade. This is why it matters. No plan here equals clicking buttons because something just looks good. That isn't trading, that's like spiritual candle reading. Define your trade setups clearly. Look for break and retest. Price breaks at a level, comes back to test it. Liquidity sweep. Price fakes out above or below a key level, then reverses. A double top, double bottom, triple top, triple bottom. These are signals and a potential trend reversal. And change of character. This is where trend shifts with a structure break. Now, your entry criteria might include things like candle pattern confirmation, like engulfing candles, rejection wick at a key level, momentum shift, or internal break of structure. This is what it's going to do for your plan. It's going to help you filter bad trades. It's going to help you create rules based on decisions and not emotion. It's going to help you explain, track, and refine your performance over time. Another tip for you here, write out an entry criteria like a checklist. If it doesn't check all the boxes, just don't trade. Number 6 is risk management. These, of course, are the rules that keep your account from blowing up faster than your last impulse buy on Amazon. Here's why it matters. You can have the best strategy in the world, but if you're risking 50% per trade, you're literally just one bad day away from reloading your account once again. Here's some good risk rules that you can include in your plan. The maximum risk per trade, it can be 1%, 5%, 10%. Really, 10% should be the absolute max of your overall account balance per trade. Do not exceed this limit. Next is your daily loss limit. Stop trading after losing 2%, 5%, whatever you deem necessary to be your limit for the day. Next is the maximum amount of trades per day. Now, 2 or 3 quality trades is absolutely fine. If you want to do a few more, that's fine as well, but just don't get into a situation where you're over trading. And finally is risk to reward. Do a calculation, find out how much money you're standing to gain versus how much money you're standing to lose based on your strategy. Here's what it's going to do for your plan. It's going to protect your mental capital and your actual money. It's going to help you avoid revenge trading. It's going to build longevity so that you stay in the game long enough to learn. Another pro tip on this, use a position size calculator. Guessing your lot size really isn't a flex. It's time consuming and it's tedious. It's a fast track to margin calls. And finally, number 7, daily review and journaling. This is your end of day debrief, a written reflection on your trades, your decisions, and your discipline. Here's why it matters. Your journal is your mirror. It shows you exactly what's working and exactly what's not. No growth happens without some good reflection, guys. Here's what you can include in this. Screenshots of each trade before and after, setup type and notes, emotional state before and after, whether you actually followed your rules, whether you learned some lessons from this in general. Here's what it's going to do for your plan. It's going to make your growth trackable. It's going to build self-awareness. It's going to help you refine your edge over time. Another pro tip for this, grade each trade based on the process, not the profit. A losing trade that followed your rules is much better than a winning trade where you just fucking winged it. So here's a quick summary in case you just skimmed them 7 steps. Number 1, pre-market routine. Number 2, check the news. Number 3, build a market bias. Number 4, identify your key levels. Number 5, define valid setups. Number 6, lock in risk management. Number 7, journal and review. Master these and your trading game will level up like it just found the cheat code. So here's some final words of wisdom for you, and here's the truth that no guru will tell you. Trading isn't about being right, it's about being prepared. Your job isn't to predict every single move, it's to prepare for the probabilities. Manage your risk and show up like a professional. You don't need a holy grail strategy. You don't need 20 different indicators. You don't need to stare at the charts for 10 hours a day. You simply don't. You just need a clear plan, consistent execution, and the patience to let your edge play out. So guys, if you got some real value from this video, for sure, smash that fucking like button right now. Subscribe to the channel as well if you want more honest, real, and occasionally ridiculous trading lessons. And most importantly, check the link in the description to join my free trading group. That's where I go even deeper on setups, trade breakdowns, free trades, education, mentoring, absolutely everything. It's a great place for you to learn, connect, grow, and share with other like-minded traders just like yourself. And yeah, it's going to help you stay consistent with a good community behind you, because trading doesn't have to be lonely and you don't have to figure all of this out alone. So here's my final thought to leave you with. Winging it is for birds. You are a trader. Plan it, execute it, review it, repeat it. You don't need to be perfect. You just need to be prepared every single day. Now, go and build your plan, print it out, tape it to your wall, follow it for 30 days and watch how everything starts to change. See you in the next video, guys. Trade smart, stay focused, and remember, be 1% better every single day. Cheers.